Hey, what's happening, guys? Dan Dario here with another Options and Play video update. Quick video today, just something that popped into my head because we are going to get into earnings season. There's going to be a lot of stuff moving around, and I mean, typically earnings season is when we play straddles and strangles more frequently. So one of two of my rules is when I'm looking to enter a straddle or strangle ahead of an event, I like to wait until late in the afternoon to do it. So 2:30 after into the close is when I typically enter straddles or strangles, right? And the reason is because I don't want the stock to have a huge move during the session and kind of skew the whole position out of whack, right? You know, if there's a huge rally during the day, then all of a sudden, like the options go into the earnings report heavily favoring the bull side, right? And most of the time I don't want that. I want it like split pretty even, like 50-50, all right? The second thing is, when do I walk away from my idea of a straddle or strangle? And one of the rules is if the stock has a move that exceeds the priced in move the day before the earnings or the day of the earnings, if they're supposed to report after the close, then I typically avoid it. Okay. Plug an example. So this isn't an earnings, but tomorrow morning they have an investor day. All right. It's been getting a lot more attention. There's a lot of people that are interested in this going into this investor day thinking it could be a move. So when I drew up the chart yesterday and I wrote up the trade idea, it was because the stock was probing the top of this like 2-3 month consolidation with the options pricing in about 2 points. It seemed like there was a lot of potential if it was like particularly good, right? You get a breakout, which you're seeing happening today. Or maybe if it disappointed, the stock was up 5-6 points just over the last few days, it could retrace a good amount, right? So the technical setup, the option pricing seemed to indicate like it was a good volatility strategy. Now the problem is today it's up over 3 points, almost 3.5 points. So it's moved more today than they were even pricing in for tomorrow's event. All right. So to me, it's too much. That's the point where I say, okay, too much is enough. I can't justify getting into this. I feel like I'm chasing it. Not only is the stock up more than almost twice what they're pricing in just for the event tomorrow, but the option pricing is also increased too. Like it went out yesterday a little under 2. Today it's almost 225, 230. So it's gone up over 10%, almost 15%. So you have to have rules, right? Even if you really want to be involved with something, right? You think it's going to be a mover. Like I still think plug could be a mover, but after this run and after the option pricing going up, my confidence is lower. I feel like it's pulling forward some of the upside potential. So to me, it's a different setup now, right? So you have to have rules in place to say like, you know, when you need to step back, say, okay, this is too much. Like I don't want to be chasing. Like the setup has changed, and for me, that is if the stock has a move that exceeds the priced in move for the event, like the day before, right? So, or in this case, yeah, so this case day before, but if it's like an earnings day and the report after the close, if it has a move during the session that exceeds the earnings priced in amount, then to me, like that's a warning sign that says maybe you should back off. All right. But earnings season is underway and expect a lot more volatility strategy ideas. But you know, we also got to be reasonable and smart and don't chase stuff around. All right. So if you like this video and you're looking for more information about trading earnings or events with options, please follow up with the link in the description of the video for more information on options and play. Have a great night. Stay well, and I'll talk to you all tomorrow.